Bonds. This is going to be the one last thing we'll take a look at today. So here was the only issue that we were having in a macro sense is bonds. So bonds pumped super hard out of nowhere. Why do they pump super hard out of nowhere? China, okay, China is in a trade war with the U.S. So the U.S. places massive tariffs on China to stop their imports, stop this trade deficit that we have. So what is China's tool to get back to the U.S. and apply pressure to us? How are they going to do that? Well, them and their buddies are going to unload massive amounts of U.S. bonds. They're going to unload the shit out of them. Sell them, get the fuck out of these bonds. Because what that does then to the bond price, the bond yield, it's going to pump it. And you see what happened. So this was China right here. Look what they did. This was their candle right here. So we lost our demand, nuked it. Look, played out perfectly into our levels. Okay, we bounced, we lost it. And look, we were coming down. We came all the way down here after we lost this supply. All right, look, this was our line. Look, bounced, come all the way down. It did exactly what we were doing, and then China came in over here and started unloading bonds, and they put in this fat fucking green meat stick. So here's the backdrop for us. So what the U.S. could do, and what Trump and their administration could do to try to create a backdoor type of QE where they can provide liquidity to markets and pump markets, is the U.S. themselves could come in and actually provide liquidity to the bond market and buy up all these bonds that China's unloading to try to pump our interest rates up on these bonds, which would then cause the Fed not to cut rates, right? The U.S. government, Pompeo and them, could try to provide liquidity into the bond market and shoot these interest rates way back down, doing a form of QE, which is backdoor. And when they drop these interest rates on these bonds back down into this demand zone, which is what it was heading for, right into here, right? Which is where it was heading for, that will then not only allow, it will force Jerome Powell to cut interest rates. Because as these bonds nuke the yield, the Fed is going to have to drop their interest rates on the Fed Reserve, right? The lower the bond interest rate, the lower the Fed interest rate has to be, right? So that's the strategy it looks like Pompeo and the boys are going for is, okay, China's pumping our bond market right now because they're unloading all these bonds, these treasury bonds. Let's go ahead and provide some liquidity. They could do this. I haven't said they've done it yet, but the play would be provide liquidity, scoop this up, shoot the interest rate back down into this demand zone. If we can lose these levels, interest rates are going to have to mark down very quickly. Jerome Powell will not have a say anymore. It doesn't matter what inflation's at. If this bond market starts getting nuked, the interest rates, Fed has to cut rates. Has to. It's not even an option. They have to. So that would be the play, because China got this shit all the way back through this supply level and through this supply level back up into this zone, which we're not fans of. We want to get this down. But the DXY is doing exactly what we want it to do. Look. Just nuke that shit. Nuke it. Okay, so we got to keep closing below this demand so we can turn this into supply. And then we're fucking cruising. All right, gentlemen. All right, now we'll leave it as demand, though, because we haven't quite lost it yet. One other thing we're going to take a look at. Okay, CME futures. Look at this. So we talked about the CME chart before and CME gaps. All right. This is huge. On the way down on this nuke on ETH, we've only created CME gaps to the upside. Okay. Let's not even do that one. It's too. Do the daily just so it's a little bit more obvious. Gap. There's a little gap right here. The fuck is this? Oh, bomba clot. What the hell just happened? A bomba clot. It just closed the whole fucking thing. Motherfucker. Hold on. All right, you should be able to see it again. Look at this. So CME gaps always like to get filled at some point. Okay? At some point, CME gaps get filled. And what we did with this massive rip to the downside over the last couple of months is we kept leaving CME gaps along the way. Okay? Well, CME gaps like to get filled. Well, if they like to get filled, at some point, price is going to have to come up and fill this gap, and fill this gap, and fill this gap, and fill this gap. And my point was, at some point, if we do fill this gap at 4,000 again, that we left at the top, well then we're going to pump to new all-time highs because that's just going to be so much momentum built up and it's going to be COVID-type price action. Because all we did on the way down was gap, 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 gap. So we're going to have to fill this, fill that, fill this, fill this. Because CME gaps like to get filled, right? So you leave this huge gap right here, right? There's a big CME gap right there. What happens? It gets filled, retested right here. Look, right? Gap down, push through it again, retest it, boom. There's a gap here, right? To the upside. What happens? Comes back down, gets filled. There's a gap here to the upside. What happens? Comes back down, gets filled. Gap to the downside, comes up, gets filled to the upside, right? So these gaps like to get filled. This is a huge bit of alpha as these CME charts. So now what we've done with this huge downside is, again, at some point these are going to get filled. The question is when, right? They will get filled. The question is when. If we go into a bear market locally, then sure. I mean, we're not getting them filled for another year or 2 years. It's going to be a while. They will get filled eventually, though. If we do run it back turbo and we don't actually lose these bear market lows and we start moving back to the upside and we can fill, especially if we fill this one as opposed to rejecting, doing something like this, like filling it and then dying. If we reclaim this, fill this one, or we're filling that one, and then we're going to new all-time highs. Huge piece of alpha. It's those CME gaps. So just remember, we have these. We have to fill this gap, huge. This little gap right here, this gap, and then this gap right above. Okay. So look, this is how you can tell where there's a CME gap, right? So we close the day right here. So it's actually from, or no, this is it right here. Right? So this is a gap from the Friday session, right? Friday. So we close the day there. Okay. And then we open. We opened here. Okay. So there's our gap, right? So right now we're currently filling it. To fill it completely, we'd have to come up into here. Okay. Same here. So you close the day on Friday. or here's Monday, here's Friday. So Monday, you close here, and then you opened here. And then you close lower, but you opened here. So that's a gap. Okay, we got to fill this still. Close the day. Green. Opened it here. All right, huge gap. All right, so we got to close these up. At some point, they're going to get closed up, whether it's now or later. We'll see. Okay, so those are your three scenarios. I gave you a ton of juice, ton of different things I'm looking at. I'm not sure what else I could possibly do for you other than obviously how we're positioning, what we're buying, what we're doing, how we're hedging inside the Discord. But if you're not inside the Discord, obviously you're not going to see that. So if you're not already in part of the Taylor's Code, link's in the description. Link is in the Twitter bio. Link is on the website, everything. It's thetaylorscode.com. If you want to get access to myself and all the other gentlemen inside of the network that we're trading with, investing with on a day-to-day basis, if you want to build an e-commerce store and start making money through e-commerce, or improve the store that you already have and have it audited by one of our mentors, which is Bobby, you can do that inside the Discord as well. My personal positioning, what I'm buying, what I'm selling, how I'm hedging, what the portfolio looks like, analysis on your own individual portfolio if you want me to go through it with you, teach you TA, teach you how to position, show you what to buy, what to sell, how you should change your portfolio, etc. That will also be done inside the Discord. You'll have direct access to myself. We'll do live calls inside the Discord. So if you want to get into the Discord, jump on a live call. I'll share my screen. We'll go through everything together. I'll teach you TA. I'll teach you how we're positioning. Everything you could possibly need to make as much money as humanly possible in these markets, you're going to get inside the Discord. Okay? If you got even $1,000, even just $1,000, that's your whole portfolio. $50 a month to be able to be a part of a network like this is worth it, because that $50 a month is going to make you another $1,000, $2,000, $3,000, $5,000 over the course of the next year. And then, of course, a lifetime, hundreds of thousands of dollars. If you have a larger portfolio than that, then it's a no-brainer, because it'll make you an extra 10, 15, 20, 100, 200, $500,000, $1 million over the course of a cycle, just because you have $50 a month into a network that's going to show you how to make money. It's a no-brainer. So if you're an investor, I'll see you inside. Outside of that, let me do a little Mr. Producer. Oh, look at that. 20 plus live viewers. The gentlemen are bullish.